Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, September 11th, 2008. Well, today the 7th anniversary of the September 11th attacks, and wow, what a day, guys. And I've said that a lot lately, ever since the holiday week about 2 weeks ago, but this has been one of the wildest markets I have ever traded through. And I've been trading for many, 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 many years, along with my partners, combined having 50 plus years of experience in trading, and this is just unbelievable. Today we saw the markets gapping lower on some negative sentiment with Lehman, as Lehman got cut in half early by about 45 to 40% again. Washington Mutual is getting crushed again. And all of a sudden, we look at the market this morning, and it looks like the indicator of Goldman Sachs yesterday being weak was true. Remember, we talked about Goldman not showing us good signals yesterday and how it basically told us that there were going to be a few problems ahead. Well, today that happened early in the day. We gapped lower, and then all of a sudden the markets caught a bid. And this was very, very unique because the markets began to rally off those lows again and struggle back to the positive line. And we're going to talk about that in the charts today. We're going to talk about key support areas, key resistance areas. There is so much to cover today. I really want to get right into it. So let's get right into it here, folks, and we'll do play-by-play of what happened in the market. Now, here's the gap down in the markets right over here. You can see the sell-off coming all the way pre-market to around 9:30. At this point, the markets are getting trashed. And it was another ugly day. Everyone was out there was kind of worrying, is this going to be a huge down day? What's going to happen? And we've noted that in the last videos, and you guys are right step in step with us here, as we talked about how the market seems to go one way, and then instantaneously, either that same day or the next day, rally the other way. And that just has continued to happen. And what we saw today, again, after following yesterday's day, and that was a wild day in itself, we saw the market gap lower and all of a sudden catch a bid. So all of a sudden here at the open, folks, you have the market catching this large bid. And again, you saw Lehman catch a bid. You saw some Washington Mutual begin to move up. And a lot of these financials started to catch a bid, but the overall market was still very, very weak. All right, we saw Goldman Sachs slowly, continuing to stay on the lower end of things. It was actually down 5-6 points. And it was interesting enough because we talk about these key support lines. And I know some of you guys may be not aware of it yet or not following closely enough yet. But the key numbers we talk about in these videos are extremely important. And you can look at them every day and understand the market so much better. And I'm going to go over that on Goldman Sachs today as well, because the 156, 157 level we were talking about yesterday played a key role in today. And I want to stress that as well. So Goldman's very weak here. The market's catching a bid, though. And what's going on? Well, we noted that, and this is in the chat room, folks, we alerted that everyone in the chat room that Google, Research in Motion, and Amazon had turned positive even when the market was down here. And right away, that was the signal. There's always a signal in the market that you're going to have some sort of rally. Today it was some of these large cap techs catching a bid. So all of a sudden, those start to rally, and the market pushes up. Now, it pushes up to key levels. Now, yesterday, what were the key levels? 1217 on the downside on the S&P, and 1237 on the upside. Today, those numbers adjust. We do our calculations for today, and today it was 1219 to 1239. So again, our calculations, our proprietary analysis, adjust those every day. Just like a moving average would adjust, our calculations will adjust as well. So today you have that, we'll say 1217 to 1219 level. Today, it was on the upside, the 1237 to 39 level. So look at where we go to on this first rally. Right up here to 1240. We basically touch underneath 1240 or 1239, and the sell-off starts. All right, so initially you have a rally to that key level. The market cannot get above that level, and you start to sell. Goldman here had rallied up as well, and it started to get weak. The market could not handle that, and it began to sell again. Now right here, notice how we come down to the moving average. This is a key moving average, the 50 moving average, and all of a sudden the market catches another bid and starts to rally up again. And this time the rally goes even higher, but it still stalls out right around that 1240 area. You can see how it kind of comes up in this range, and you have this choppy trading, up, down, up, down, up, down, and then you start to fail. And what happened here was Lehman started to give back a lot of the gains. It started to come back. In fact, it was making new lows right around 3 o'clock. And then right around 3:45, all of a sudden, there's a rumor that comes out in the markets that Lehman has a suitor, Bank of America, I believe, and all of a sudden Lehman jumps. And we saw it on immense volume take off from about 385 to 390 to $4.50 in a matter of seconds. It was really unbelievable. The market caught a huge bid here. Goldman went positive. It came back above the key level here, and the market was able to close upwards on the S&P of, let's get an exact quote for you, 1249 on the S&P. All right, so we were able to recapture that 1239 level that we would watch today. That's a key level on the S&P. All right, on the downside, 1219 is still a key level. So those key levels are 1239 is a support line, 1219 is a support line. But the overall upside you have to watch here, and I'm going to tell you this key number again, is 1260. We have to recapture that, otherwise nothing's for sure in this market, okay? So watch for that to continue to move up, possibly to recapture that. That'll be a lot of resistance at 1260. Should we recapture that, then we can see exactly if this market can stabilize. All right, there's a lot of keys in this market. We're in the eyes of the storm here, one of the most intense storms that we've seen here in history in this whole credit crunch and credit crisis. All right. So again, the market closed at the highs of the day. The Dow was up 165 points. The Nasdaq was up 30 points, and the S&P up 17. About 1.3 to 1.5% gains, and most of it coming here at the end. Believe it or not, right around here, we had given up most of the gains, and we rallied to the highs of the day just about into the close. So fantastic, unbelievable day. But let's talk a little bit about Goldman Sachs, because I want to touch base on what we had talked about yesterday and to show you the key levels. All right, number one. What was the key level we talked about yesterday? 156 to 157. Now, we closed right above that, right here on that 157 yesterday. That was on key support. You gap lower, and the next support line was that even number of 150. All right? So you know you're going to have support at 150. So obviously your buying opportunity would be a break of 150. We call it an even number play. But it's one thing that we talk about in the chat room, how you know to pick it up below or above an even number, depending on what the basic chart is showing you. And that turned out to be dead on. It got to 149.87, hitting that 150 support, and it started to rally off. Now, Goldman got to the 155 area right over here and couldn't quite get to that 156 and sold off. Now, the next leg up on Goldman Sachs took it to that 156 level before the next sell-off. Now, remember, 156, 157, major resistance. Then on the last charge higher, it gets back above 157, a key number on Goldman, and that's where we close. It also happens to be gap fill. Right here, it was able to fill its gap and close basically flat on the day to down slightly. So really unbelievable action here on Goldman Sachs. Goldman we view as one of the key market leaders to follow how the market's going to behave. And you can see here that it really turned out to be true. The support and resistance lines we talked about yesterday on Goldman, very, very key as well. Okay, that's just another angle of this. The SPY, let's talk about the daily chart. We're going to talk a little bit about some of the technology. Had a fantastic day today. But today was really financials, Lehman, and Washington Mutual, and Merrill Lynch. Merrill Lynch got smoked today. I mean, let me just quick show you Merrill Lynch's chart, down almost $4. It was just ugly here. All right, and you can see the fall on Merrill. It kind of reminds you of Lehman, except Merrill's a lot higher than Lehman is currently. All right, so in any case, folks, that's what's going on right now. Let's look at the SPY, look at the supports. Again, watch that 1260. You can see the volatility here. These moves every day. We're not talking about 100 points on the Dow, which is generally considered a big move. We're talking about 200-300 point norms almost, it seems, in this market. And you can see the key support line here, guys. We tested it again today, right here. It held. We rallied off of it again. This has been one of the wildest markets, as I said, that I've ever seen and traded through. And it's been a fantastic trading experience. Absolutely fantastic. I do encourage everyone to come join the chat room, even if you're not a full-time trader, just to learn, listen. Best thing you can do as an investment to do that, and just learn the markets as we do one-on-one technical analysis all day long in that chat room. One thing you're watching here on the upside is this area. This is going to be right around that 1260 level on the S&P. This is going to be key resistance right up here, and we're going to probably test it at some point. It may not be tomorrow. To be honest, folks, the volume was a little on the light side today, which worries us a little bit from the upside move. But again, there's a bunch of stuff coming out. You have major economic news tomorrow at 8:30. You have the PPI, which is going to be an inflation gauge. You have a lot of news at 10 o'clock. Plus this whole Lehman, Washington Mutual, Merrill Lynch stuff. Lehman is a wild card. Whether or not it gets taken out, taken over, I don't know. But you have to be ready for the volatility of the next couple weeks at least. Next week you have a Fed meeting. That's another issue. We think the dollar is topping out. We also expect to maybe next week to see a pop in oil. You can see oil was down again. We're right above that 100 support line now. It wouldn't surprise us to see a bounce somewhere around here. Whether or not we break it slightly and then bounce, or maybe just bounce before, we're not sure here. But you're getting into that key level where the dollar, we're more following this as a dollar play, as the UUP was up just 3 pennies. You can see it's still hovering right around this key resistance line. All right, so we're going to watch that very, very closely in the next few days. If the dollar pulls back, in general, you get a rally in commodities. There were also certain commodity stocks that rallied today, and that could be also signaling. Potash, POT, up almost $8. U.S. Steel up $4. So a lot of the key names that have been just decimated here on the commodity side are getting little bounces. Now, is that an indicator maybe we see a little bounce in oil? That's possible. We're going to kind of watch the dollar, gauge it off our resistance levels on the dollar. We'll talk about that in the chat room, obviously. So some key things going here, guys. One thing I also, before the end of this video, wanted to point out, just remember those key resistance support levels on the S&P. Also, interestingly enough, since September 11th, 2001, the Twin Tower attacks, you haven't had a down day in the markets. It's almost like the PPT's there supporting things. It wants the country to have a good September 11th in the markets. Very, very interesting to note that as well. All right, folks. So keep that in mind. Volume was relatively, it was medium today. It was average. For all that was going on, it was a little light. Have a wonderful day, guys. Hang in there. It's a wild market. We'll talk to you tomorrow in tomorrow's video.